Ladies and gentlemen, good day and welcome to the Jnk India Q3 FY25 earnings conference call hosted by IIFL Capital. As a reminder, all participant line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Akshit Gangwal from IIFL Capital. Thank you, and over to you, sir.
Thank you, Sejal. Good afternoon, everyone. On behalf of IIFL Capital, I welcome everyone to Jnk India's 3Q FY25 earnings call. We have with us today Mr. Arvind Kamath, Chairperson and Whole-Time Director, Mr. Praveen Sathe, Chief Financial Officer, and Ms. Annie Varghese, Senior Manager, Investor Relations. Without further delay, I will now hand over the call to the management for their opening remarks, which will be followed by Q&A. Over to you, sir.
Thank you, Akshit. This is Arvind Kamath here. Good afternoon, everybody, and welcome to Jnk India Q3 FY25 earnings call. I sincerely appreciate your time and continued interest in our company. The third quarter FY25 was centered around project execution, with several key assignments reaching their almost final phases. Although revenue recognition was lower during this stage due to milestone-based billing, while fixed costs remained high, impacting our margins. While the quarter did not see major order inflows, our commitment to efficient execution remained strong. For the 9-month period of FY25, total revenue was 295.1 crores, reflecting almost a 16% year-on-year growth. As of December 31st, 2024, the order book was 1,226 crores, providing a strong revenue visibility and reinforcing our execution pipelines going ahead. Entering quarter 4 FY25, the momentum has picked up with a significant order secured in January 2025 from Jnk Global Company Limited, Korea. This contract for the Pengerang biorefinery project in Malaysia includes a residual engineering, procurement, fabrication, and supply of critical fire heaters, along with assistance in erection, commissioning, and performance testing. This order represents another step in strengthening our global presence and demonstrates our ability to win high-value international projects, as this will be the first order for Jnk India to Malaysia. Financial strength was further reinforced with an upgrade in our credit rating by CRISIL in January 2025. The long-term rating improved to A- from the earlier BBB+, while the short-term rating has been upgraded to CRISIL A2+ from CRISIL A2. This enhancement reflects the company's sound financial discipline, operational efficiency, and ability to scale effectively. Looking ahead, our confidence remains high in trying to achieve a significant revenue for the fourth quarter FY25, supported by a strong order book, strategic diversification, and a focus on operational excellence. The company remains committed to executing ongoing projects efficiently, expanding into new markets, and delivering long-term value for all stakeholders. I will now hand over to our CFO, Mr. Praveen Sathe, to provide a detailed financial overview. Thank you.
Thank you, Mr. Kamath, and good afternoon, everyone. This is Praveen Sathe, CFO of Jnk India Limited. I am pleased to present the financial performance of Jnk India for the quarter 3 and 9 months of financial year 25. For the 9 months ending December 31st, 2024, total revenue increased by 15.6% year-on-year to INR 295 crores, supported by steady project execution. Operating profit came in at 98.2 crores with a margin of 33.3%. EBITDA for the period was 37.3 crores with a margin of 12.7%. Profit after tax was 17 crores with a margin of 5.8%. During Q3 FY25, the total revenue reached 96.9 crores, reflecting 9.7% sequential decline. Operating profit for the quarter was 29.3 crores with a margin of 30.2%, while EBITDA was 9.75 crores with a margin of 10.1%. Profit after tax was 2.8 crores with a margin of 2.9%. This quarter primarily focused on project execution with several projects in the final stages, where fixed costs remained the same but revenue realization was lower. It has impacted margins. As a result, EBITDA margins were moderated due to the cost absorption along with higher employee benefit expenses, which includes ESOP-related costs. However, it is important to note that ESOP-related costs will conclude by the end of FY25, providing a clearer margin outlook moving forward. Heating equipment continues to dominate our order book at 82%, with wet gas handling systems and process plants contributing the rest. Geographically, 92% of our orders remain domestic, while international markets account for 8% of the order book. While Q3 was largely an execution-focused quarter, we remain confident about achieving the targets for FY25. Our pipeline remains strong and we expect the execution momentum to pick up in the coming quarter. Looking ahead, Jnk India is well positioned to capitalize on industry growth and we remain committed to delivering value to our stakeholders. In closing, I would like to thank you all for your time and continued support to Jnk India. We now welcome any questions if you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. And my first question is, of course, you did mention about the Q4 should be a better quarter, but I would like to dwell on that more. How do you think about the execution in Q4? I think you mentioned that you can still execute the entire opening order book of F24, which was roughly around 6 billion for the full fiscal. Are we still maintaining that?
Our opening order book was 620 crores, and in the last earnings call, we did mention that our endeavor is to execute the complete order book in this financial year. Now, certain projects have got delayed due to various reasons which are not under the control of Jnk India. So, we might suffer a reduction in the target by say 10%, and moreover the projects are of PSUs and there are export orders also. So roughly 10% reduction expected in the targets that we had placed before us for this fiscal.
Understood, sir. That's very helpful. My second question is with EBITDA margin of 17% and 21% in last two fiscal. And do you think, given whatever we are expected to execute in Q4, we can achieve those margins in FY25E before ESOP expenses? And what was the ESOP expense for the 9 months?
Yeah, if you see the EBITDA margin for the 9 months before ESOP expenses was around 15.21%, and after ESOP it was 12.7%. And that ESOP cost would go away in March 25. So far as the comparison with the previous year is concerned, definitely the margins were 2-3 points higher than what general guidance that we had given initially of 17 to 18%. This year, due to various reasons, due to increased cost, increased direct cost also, and the increase in number of employees, the post-listing effect of the ESOP reserves, we see that the guidance would come down by 3 to 4 points.
Understood, sir. So we had a very good Q1 in terms of order inflow. I think it was a superlative quarter, but after that Q2 still had a decent order, but Q3 has been hardly any order. How do you think in this context about the Q4 and next 12 months? How is the pipeline and prospect looking like?
Yeah, hi Mohit. No, the pipeline looks actually very good, including India and exports. As we started off, yes, quarter to quarter finalization varies considering the size and the quantum of the projects which we bid. So it is generally not uniform, as we told last year as well. So it could come in one of the quarters significantly, and some quarters it could be a bit slow. But this quarter also there is at least finalization of 2 important opportunities, and going ahead for 6 months also the pipeline in terms of the order inflows or the order pipeline is very healthy, I must say, because you also might be aware there are also significant projects announced in India as well, in terms of the petrochemical opportunities, including BPCL Bina, IOCL Paradip, Petronet LNG. In all of these projects, we have already received the inquiries, and some of the projects we already submitted the offers, and some the inquiries are received, and we are in the process of submitting the firm proposals.
So if I can ask again, sir, do you think a lot of these opportunities will materialize in CY25 in terms of finalization of orders? Not for you, for the industry, I'm saying in general. Do you see the finalization of orders happening for the industry so that we can benefit? That's the question. Or do you think there could be some delay?
FY25?
No, sir. I'll just rephrase, sir. Given that you just spoke about so many opportunities, I think in your opinion, a lot of these orders will get finalized in CY25, or we can see any delayed finalization order, which means the CY25 could also be a weak year. That's what I'm asking.
Yeah, I mean, actually, even last year we were in a similar situation. So there are about 2 to 3 proposals which the price bid could be opened any time, and the order finalization could take place either in this quarter, or it could happen in the first quarter of QY26. It becomes a bit difficult for us to exactly kind of plan. Focus.
Thank you, sir. Thank you. That's very helpful. Very, very helpful. Thank you, sir.
Yeah, thank you.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Thank you so much for taking my question. So firstly, my question is on, again, the order wins that we are seeing for this quarter, particularly what was the reason why in Q3 we saw almost nearly order wins?
Can you please repeat your question, because your voice is cracking?
Am I audible now?
Yes, please.
Yes. Was there like an ordering hike, like an ordering stop in the industry in this quarter? Is that the reason why we did not see any orders coming this quarter, or is it that the finalization is getting delayed?
Yeah, I mean, no, the finalization has been delayed, and we actually didn't lose any significant order in the last quarter. That was your question. I mean, if I got it correctly.
Yes.
Yeah.
Also, I would like to know what are the opportunities for Jnk Global? Can you throw some color on how these opportunities will pan out for global and then probably could transfer over to us?
Yeah, I mean, as I said, the opportunity pipeline is quite a large. Like as I just said, we received the first opportunity for Malaysia. So same way, we have the big pipelines for many countries, including USA, Algeria, and also in Middle East, other than India. And in India, there are projects which are already announced, which we have received the inquiries as well. Which I already mentioned in the earlier message. Yeah.
Lastly, just if you could call out the value for the ESOPs that has been there for 9 months, what is expected for the entire year in rupee amount?
We are unable to hear you.
You are not clear, please. Am I audible now?
Please use your handset. Due to no response from the current participant, we will move on to the next participant. The next question is from the line of Charanjit Singh from DSP Mutual Fund. Please go ahead.
Hello, sir. Am I audible?
Yes, sir.
Hello. Yeah. So, sir, while you've talked about, the prospect pipeline is pretty strong. So, if you can just quantify the prospect pipeline and generally what is the kind of hit rate which we have seen, in terms of these order finalizations. That's my first question. And second is you also talk about certain, new businesses which you are targeting. What are these new businesses and are they included in the, prospect pipeline, or you think that they will be on top of that as we see that, overall our pre-qualifications picking up in the new businesses? Those are the two questions, sir.
Yes, Mr. Singh. So basically the big pipeline is around, in terms of the value, it is about 4,000 crores for exports, and it's about 4,000 crores for the domestic as well. So that's the kind of a big pipeline we have, which is expected to get finalized in next about, say, 6 to 8 months or so. That's the, once we bid, that's the timeline for finalization. So this is the kind of opportunities we have quoted for, and mainly in the product lines of fire heaters, reformers, cracking furnaces, flares. And in terms of the new opportunities, not much is included in this pipeline. So the other pipeline for hydrogen plants and also some of the CBG units or incinerator, which is a new product line. That pipeline is not so large as of now, but it could be to the extent of about 200-250 crores. And our traditionally hit rate has been around 20% or so in terms of the order finalized, 20 to 30%. So we, we are quite sure that we will be able to maintain that hit rate going ahead as well.
So, sir, this 20% hit rate is, for the domestic or for the export? How is that different, sir?
It's generally for both put together.
Okay. And so you also touched upon, that there's a strong pipeline in US, market. So what are the kind of prospects there? And, with a lot of emphasis which is going to come on the oil and gas space in the US market, where Jnk generally operates in a big way, how you see that, market just now maybe going to shape up in the future?
Yeah, US is yes, as you said, it is a very important market, and no, we have not really, even including Korea, has not done practically any business in USA. Whatever we received the order in Q2 of FY25 was the first order for US is from for Jnk for a fire heater, and now we have about 2 proposals through large EPC contracting companies for the projects upcoming in US. And now more prospects we should be able to see with the new projects coming up further. But these 2 are also a good size of projects, and I think they would probably finalize in next about 5 to 6 months. So in the pipeline of the, what I mentioned, exports, these 2 projects in US also are included.
Okay. And sir, lastly from my side, in terms of if you can highlight one, what could be our expectation in terms of the growth going forward for the next financial year, looking at all these prospects getting concluded, and in terms of the margin also, if you can touch upon how we should look at the margin going forward in the next financial year.
You see, as of now, our order book position is 1,220 crores. I think that. So at the end of March end, so the order book position would definitely be above 1,000 crores. So it depends on what is the order inflow in this quarter. So we would definitely have to gear up and deliver the growth far better in next year, because this year it has been a little bit fallen short of what we wanted to deliver. So this, whatever the shortfall is there, we will have to catch up in the next year, definitely, because we also have a committed delivery timelines with the customer as well. So considering that, we look, whatever the original projection for FY26 is there. So I think we should be able to maintain that. And in terms of the margin profile, yeah, generally, traditionally, we have always told that our margin is anywhere around EBITDA of 17 to 18%, and that's the EBITDA we should be able to maintain going ahead as well. So whatever the EBITDA change which happened in last year and this year, it's due to certain reasons, but now we should be in a position to maintain a pretty uniform EBITDA as well.
Got it, sir. So thanks a lot for taking our questions. That's all from
me. Yeah, thank you.
Thank you. The next follow-up question is from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Hi, am I audible this time around?
Yes, ma'am.
Yeah, better.
Thank you so much. I wanted to ask, could you call out the rupee amount for the ESOP for the 9 months and what we're expecting for this year?
Maybe what are you looking for? 9 months?
9 months. We could hear a part of your question.
What is the ESOP in rupee value for 9 months and for full year?
Yeah, the ESOP reserve for this 9 months is 7.51 crores, and for the entire year it could be around 10 crores or so. So about 2.5 crores more in the last quarter.
Okay, thank you so much.
Thank you. The next question is from the line of Mohit Jain from Chris PMS. Please go ahead.
Hello.
Yes, please.
Yeah, thank you for taking my question, sir. So my first question is on the working capital. How is the working capital cycle shaping up for us?
Sorry to interrupt, sir. I would request you to please use your handset.
Can you hear me now?
No, sir.
Hello, can you hear me now?
Yes.
Now? Yeah. So how is the working capital cycle shaping up for us? And are we seeing any relaxation in the receivable side? Also, sir, I believe we were facing some issues in the collections from PSUs. So, sir, can you throw some light on this?
Yes, surely. See, typically We have seen that our working capital cycle have been in the range of 120 to 140 days. At some stages, it got stretched up to 160 days also. But ideally, it should be around 120 days going forward. And if you see the receivables from the PSUs also, we have improved on the receivable days also. So in spite of the client being PSUs, we could now get after them somehow and push them to release our payments little faster than what they used to be in the previous year. And our utilization on the working capital lines has also considerably reduced. So that will show that the working capital cycle has improved, because the interest cost that we have borne for this quarter, that Q3, is hardly 20 lakh rupees as compared to the Q2 interest cost. So this shows that we are using the working capital lines also optimally. So things are improving for the better. Going forward, we see working capital cycle somewhere between 120 to 130 days.
Okay, sir. Thank you very much. Also, sir, in the first 9 months, we have done roughly around 300 crores of top line. And so we have guided for like 600 to 650 crores initially. So, sir, are we on a right track to do like 300 crores in the coming quarter, Q4?
So I think a couple of questions earlier, I have said about this, that the target that we had kept for this financial year may get reduced by 10% or so, because there are certain factors, which have resulted in delays in execution of the project. So there might be a slippage of 10% or so from the targets that we had kept for this financial year.
Okay, sir. Thank you. That's all from my side.
Thank you. The next question is from the line of Ashna from HDFC AMC. Please go ahead.
Yeah, hi. Good afternoon, team. Sir, despite this 10% slippage that we're talking about, even if we consider our guidance to be around 620, 630 crores, so execution, it lands around 580 crores for the full year. And that again brings us to around 280, 290 crores of execution for Q4. So how confident are we of hitting that top line number?
I mean, Asma, just to last 2 years actually, if you see our historically, whatever we have delivered in 9 months revenue, the same revenue we have delivered in the last quarter as well, that is Q4. So that's our endeavor to do this year as well. But however, we just want to be considering the various situations, because of the many executions are projects that are quite far-reaching sites like Numaligarh and Paradip, etc., Barauni. So considering all this, that's how we said it could fall short by about 10 to 12% than what we had anticipated for the complete year.
Yes, sir. So that's what I'm asking. Despite that 10% of shortfall, it still comes out to be around 280, 290 crores of execution is what I wanted to understand. Would we be able to do that in Q4?
Yeah, that's our endeavor to achieve that. Similar, that kind of numbers in the last quarter.
Okay, sir. And so in terms of margins for Q4, for the full year, you mentioned that there might be a shortfall of 3 to 4 percentage points. So that again brings us to around 12% of full year EBITDA margin. Is that safe to assume?
Yeah, somewhere around 12 to 13%.
Okay. Okay. So this shortfall has also been, you mentioned, has been because of some increased direct cost and some projects getting delayed. So I'm understanding those projects are now back on execution and would get completed over coming quarters?
Yeah, the projects have been getting executed. But since the projects are with the PSUs and the projects are on the remote sites, there are certain conditions, environmental conditions or the conditions which are under the control of the client. Because of that, there have been certain delays. So projects were never stalled, they were getting executed and they are on track right now.
Okay, understood, sir. And just one last question in terms of the pipeline. You mentioned 4,000 crores for exports and 4,000 crores for domestic. These are two separate, is the understanding correct?
That's right. Correct.
Okay. In exports, are there any specific, like for domestic, you're able to highlight the 2-3 key projects. So for exports, are there any large projects that are there in the pipeline which we might know of?
Yeah, there are mainly couple of projects in Russia, USA. Russia, they're there, but Russia, the finalization has been delayed, so we're not really, focusing that much because there's been a substantial delay in the Russian finalization. But yeah, now there are a couple of important projects in the US, which, we are, the finalization is expected in next 3 to 6 months. Other than that, there are 1 or 2 projects in Middle East as well.
Okay, good to know, sir. Then just one last question. The Reliance order which we got in the Q1 this year, when do we expect the execution to begin and to conclude for that?
The execution has already begun. We have already started booking, some revenues as well, though they are small in nature. But the execution completion is in the next financial year.
So by March 26.
Yeah, March 26. Correct. Yeah.
Okay, understood. Thank you, sir.
Thank you. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
So my questions have been answered. Thank you so much.
Thank you. The next question is from the line of Varun Mohanraj from Sakanvia Capital. Please go ahead.
Thank you for the opportunity. So you mentioned that your export pipeline would be around 4,000 crores. So in previous calls, we have mentioned that some of the export orders would be coming from the Jnk Global company. So I just wanted to know whether we would be having to pay any royalty or any fee for the export opportunity that comes through the Jnk Global route. Thank you.
Whenever the order is received from Jnk Global, they take care of their cost, and whatever we bid, we receive the order at that price. So there is no separate loyalty to be paid to them. Like we already received an order in this quarter as well for Malaysia that was from Jnk Global. So there is no separate loyalty to be paid when we receive the order from them itself. Only if we receive the order for exports directly from the customer, then we have to pay them up to 3%. Up to 3% of the order value.
Okay. Thank you. And I think in one of the previous calls we mentioned about the products being fired heaters, reformers, and cracking furnace. So I just wanted to know if the 1,200 crore order book is spread across these products, or do we also have a wide range of SKUs?
So it's about 50% of that is cracking furnace, and about balance, 40% is fire heaters, and 10% is the other products like flares, incinerators, etc.
Okay. And what's the vision with the green hydrogen vertical, and like 3 to 5 years down the line, how big vertical or a revenue stream this particular product could be for us?
So see, typically the green energy and the renewable energy is our focus, but currently what we're doing is developing our expertise in this line. So as maybe 3 to 5 years, we want that line to be at least, say, about 30% of our total revenue. That's our intention is.
Okay.
As you know, there are a lot of obviously action taking place in that, or there is lot of work going ahead, but actual orderings are not really happening in hydrogen, green hydrogen or other allied areas. But wherever the opportunities are there, we just want to ensure that we are able to bid and we are able to get qualified and develop our capabilities in executing such projects as well.
Does our existing products have a synergy with the green hydrogen industry, or should we go about developing completely newer products for this green hydrogen industry?
No, I mean, the existing, they do have a synergy, and that's also one of the reasons why we want to develop that expertise, because even currently through the reformers, we are producing hydrogen. So in terms of handling capability of hydrogen, we have already developed that over a period of time. So here, instead of the reformer, we would be using the electrolyzer when we are actually producing green hydrogen. That's it.
Okay. And my last question would be on the Russian pipeline, which we mentioned in the previous call, that would be like 2,000 crore pipeline. So I think to the previous participant, you mentioned that there's been long delays. So do you think it would materialize sometime in the future, or like it's I just want to know what is the the order for finalization from Russia?
Yeah, I mean, we are under active consideration, but unfortunately, there's been delays in finalization. We are in touch regularly. So if there is any progress happening, we will come to know. But as of now, yes, there are still delays in terms of the order finalization from Russia.
So the 4,000 crore pipeline is excluding Russia, which you are mentioning, or is it including Russia?
In the 4,000 export pipeline, there is a certain amount of Russian proposals are also there, firm proposals, yeah.
Okay. Thank you. That's it from my side. Thank you.
Thank you. The next question is from the line of Sunil Jain from Nirmal Bang Securities Private Limited. Please go ahead.
Yeah, thanks for this opportunity, sir. Sir, earlier...
Yes, sir.
Hello?
I would request you to please use your handset.
Yeah, I'm using handset only. Am I audible?
Yes, sir.
Yeah. Earlier you were guiding for 17 to 18% margin, and from the order visibility, you must be calculated that margin. So is there any change which has happened, some extra cost which has come, that's why the margin has come down?
See, we have already mentioned in our earlier calls also that the project has different execution cycles, and at the initial stages of the execution cycle, typically the margins are on the higher side, and during the middle stages the margin dips, and again at the concluding stages when we are doing the erection work or the services portion is built, the margin again rises. So now in the current year, whatever revenue that is generated out of the projects, those are in the stage wherein the margins are low. They are in the middle stages of their execution cycle. So that has resulted into dipping of the margins.
Okay.
And last year, we did not book new orders significantly in the last financial year. So typically what happens is, if you book new orders, then there are certain orders in the initial stage which offset this effect when certain projects are in the middle stages. But this cumulative effect has resulted into reduction of margin.
And the same situation will be there in the fourth quarter also. That's why
that is what we said, that somewhere the EBITDA would be in the range of 13 to 14%.
Yeah.
And from the financial year 26 onwards, you will see that the margins will get stabilized.
Mm-hmm. So the last execution part will come in 26, and then we will have a better margin.
Yes.
And so second question related to interest cost. This quarter, the interest cost came comparatively higher at over 5 crores. And you said that the actual interest in that is only 20 lakhs. So what is the rest of the cost? Is there any one-off in that?
It is not the interest cost, it is the finance cost. And the finance cost includes, apart from the interest, in the last year, for the December 23, we were having credit facilities of 150 crores. Coming this December, we have credit facilities of 457 crores. So we have availed additional limits of 307 crores from the last Q3 to this Q3. So this has resulted into the loan processing fees and the stamp duty charges. So if you take that into consideration, that itself is around 2.75 crores out of this. And also there are bank guarantee charges. We have issued bank guarantees to get the advances as we got the orders from the Reliance. So around 85 lakhs is towards the bank guarantee charges. So if you add these three figures, they will come to around 3.5 crores out of that. So typical interest cost is not the entire component of this finance cost.
Okay, sir. Fine. Great. Thank you very much.
Thank you. The next question is from the line of Raj S. Vyas from TM Investments Technologies Private Limited. Please go ahead.
Yeah, thanks for the opportunity. I just wanted, what will be the absolute ESOP cost for FY25? As we have mentioned,
ESOP cost, I have answered this in my earlier to the earlier question also. For 9 months, the absolute number is 7.51 crores, and about 2.5 crores additional cost will come in this Q4. So roughly it will be around 10 crores for this fiscal.
Yes, 10 crores for this fiscal. And other thing is, in the earlier, in Q2, you said that H2 will be far better than H1, but I guess in terms of Q3 earnings, we've also seen the order book declining. So I'm understanding that this is because of some of the execution has played out in this quarter. Is this correct, if my assumption is right?
Yeah, if you see the quarter in isolation, you will feel that order book has declined. There is an execution, of course, but in the H1 itself, we bagged the orders to the tune of around 880 crores. And our target for this financial year was somewhere between 800 to 1,000 crores. So, in fact, we are on the right track to achieve our target to complete the order book. So, as the orders get executed and till the time new orders are booked, the order book gets reduced.
Okay. And do we stick to the revenue guidance of 600 CR as mentioned in the earlier calls as well? Or there is some reduction in that as well?
Question also earlier that we are anticipating about 10% decline from the target that we had kept for ourselves for this fiscal.
Okay. And have you won any new orders currently? If so, can you elaborate on the same? And what will be the growth forecast for the same? The completion of the orders.
For this quarter?
Yeah.
We have already received one order, which we
apart from the latest
order, and there is a likely finalization of about 2 opportunities, one domestic and one export. But we wouldn't know exactly they would get, in terms of the actual ordering would happen in this quarter or the Q1 of the next year. But those 2 large opportunities are under finalization that way. One for the domestic and one for export opportunity.
Any tentative figure of the same?
See, we cannot give a tentative figure of order finalization because we will always anticipate that we will get all the orders that we bid for, right?
Correct.
And as soon as possible.
Okay. That's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Anshul Jethi from LKP Securities Limited. Please go ahead.
Hello, sir. Am I audible?
Yes, sir.
Yeah, please.
Yeah. So as per your one of the filings that Suntech Infra has filed an arbitration petition against you for the contract related at Dahej site, right? Is it related to the Reliance project only?
Yes, it is related to the Reliance project.
So has there does this affect any execution timeline, or that goes on as guided by you previously?
That doesn't affect the execution timeline because we have already engaged another contractor to carry out the same work, and there we have mentioned clearly in our disclosure also that there would not be significant financial implications out of this arbitration.
Okay, sir. Thank you. That's it from my side.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Thank you all for joining our quarter 3 and 9-monthly FY 2025 earnings call. We truly appreciate your time and interest in learning more about our company, Jnk India. We value your support and look forward to continuing this journey together. If you have any further questions, please feel free to contact us and we will be more than happy to address all your queries. Thank you so much.
On behalf of IIFL Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.